Hey, it's Mike at Cross Country Mortgage. It's Monday morning. Actually, it's Tuesday morning. It's time for your Tuesday morning mortgage update because yesterday on Monday, the market was closed. It was Columbus Day. Hope you all had a good 3-day weekend. I had a great weekend. In fact, I'm going to share a picture with you. I went steelhead fishing on the Deschutes River with a bunch of friends. That is a steelhead. That is the fish of 1,000 casts. And that's a nice toad, but had a wonderful time. So again, I hope you all had a great weekend. Let's talk about what happened with the market last week, what's going to happen this week. I always try to give you some insight about what's happening in the real estate market, mortgage side of things, so that you can have some impact and make those good decisions for yourself. So, what happened last week? We saw rates increase a little bit, a 32 basis point sell off, meaning the pricing of the interest rate got worse, and that really caused rates to go up. So, in the last 2 weeks, we've seen mortgage rates go up about 0.5%, and we've seen the cost of that rate increase by about 100 basis points. So let me put that in perspective. If I quoted you a rate 2 weeks ago, whatever that rate was, let's say it's 7%, and it was a par rate, there was no cost for that interest rate. Today or Friday, but basically today, that same rate, 7%, now is going to cost you 1%, 1% of the loan amount. So definitely pricing got worse, but typically that also affects the rates as well. If you want another rate at a par cost or no cost, you would actually be taking a higher interest rate. But like I've said, interest rates are trending down. We know that, but we just hit a mogul. If you think about a ski hill, you're going down a ski hill, you're going to hit some moguls along the way. And let me show you what that looks like in relation to the moguls. So this is a chart that I show you often. It's the trading of mortgage-backed securities in the bond market. This is a 6-month representation. Each one of these bars represent 1 day of trading. And you can see at the right side, that is today, we see a little bit of green, a little bit of increase in pricing, which means rates got a little better, not much. But if we look over the last 2 weeks, this downturn, which was 2 weeks ago, 80 basis points in a week. Last week, 32. So collectively over 2 weeks, that's 100 basis points. But again, put this in perspective. If we go back all the way to April, rates were definitely over 7% back then. Now we're quoting rates under 7. So we're absolutely in a better position. If we go back to October of last year, rates were over 8%. So we've seen almost a 2% improvement in rates in the last 12 months. That's great. That's very significant. So what are we talking about this week that's actually going to affect the market, affect mortgage rates? We're looking at retail sales and oil prices and a few other things that are down the road. So I want you to think about kind of the word this year is uncertainty. Talk to a lot of clients, buyers, sellers, and everybody is wanting to wait till the election's over with, wait till the housing market kind of corrects and maybe stabilizes, wait till interest rates come down. A lot of uncertainty, and that uncertainty can be paralyzing, and you end up not making a decision. And everybody tries to time these things so that they can get in at the right time. Timing never works. It rarely works. And this is what we want to remember is it's time in the market that's going to gain wealth. It's not trying to time it and get in at the right time. Now, look, if you're going to buy a house and trying to sell it in 6 months or a year, yeah, we need to talk about some different strategies on how you're going to do that. But if it's going to be 3 or 4 years down the road, think of real estate. It doesn't change overnight. When that election happens, it doesn't mean rates are going to change immediately and the price of homes are going to change immediately and demand's going to change immediately. We see very predictable patterns in real estate. We know what's coming. 5 to 10 years from peak to peak and valley to valley, and depending on the economic environment. So we know where rates are going. We can see them changing. We know where prices are going, coming up or down. So don't let this uncertainty stop you from making a good financial decision. Don't let that fear decide what you're going to do. So retail sales, big report coming out this week. Are we buying stuff? Are we going out and buying more shoes? Are we buying milk? Are we buying stuff in the stores? And obviously the big retail sales market's coming up in the holidays. So we expect this report to be weak. It's coming out Thursday. We've had weak reports. Weak retail sales means weaker economy. That means rates actually go down. So we're paying a lot of attention to that Thursday. Oil, we've talked about this the last couple of weeks. All the unrest over in the Middle East. Is Iran going to exist? Is Israel going to just bomb all their oil refineries? Well, it appears that cooler heads have prevailed. We're starting to see some of these oil prices that kind of got jacked up a couple of weeks ago start to cool off and come down a little bit, that's good because everything we have has oil in it. Everything we use has oil in it. So if we see those oil prices go up, the supply and demand affected by all the unrest in the Middle East, that's going to affect our pocketbook, and that's inflationary, and that's bad for mortgage rates. I want you to keep in mind the end of this month, October 30th through November 7th. October 30th through November 7th, a huge week because we're going to see some big jobs reports coming out. And the reason rates went up 2 weeks ago is because strong job numbers came out. So is that going to continue? We're going to see the election finally be over. People are going to have a little more confidence about what direction the country's headed in, maybe. We're going to see some big inflationary reports come out. So a lot of things are going to happen ahead of, and the fourth thing is that FOMC meeting, the next Fed meeting. Are they going to raise rates? Well, the estimates are they're going to raise rates at least 0.5% over the next two meetings. Will they do it in November? Will they do it in both meetings? Will they even raise it 0.5%? But that's the expectation. Cut the Fed fund rate. Cut the Fed fund rate by 0.5% over the rest of the year, and then in 2025, cut another 1% in 2025. So a lot of that's going to come out in the news and the reports in that first week in November is going to really set the stage for what the FOMC is going to do in their November Fed meeting. So new program that we have, it's called the Cash Plus program. It allows you to buy a house with cash. Get approved with us. We'll buy the house for you with cash, and you now can compete against 25% of the market that's buying homes with cash. So you don't have to think you're in a down position or a negative position because you're getting a mortgage. We will buy the house for you for cash. A lot of details that I'll walk through if you have any questions, but just keep in mind, this is a real program, no appraisal contingency, no loan contingency, and I'd love to share with you how that program can help you buy a house. One final thing, we're starting to see conventional loan limits increase in 2025. The conventional loan amount's going to over $800,000. This is great for people buying homes in those higher price ranges. And we're honoring that loan increase amount now. So we're funding those loans now. We're not waiting until January 1st to make that change. So that could set the stage for you to get it in at a better program now and not have to wait till the beginning of the year. So if you have any questions, I'd love to hear from any comments. Please share